and welcome back to NDTV Profit. I am Mihika Barve and you're watching Ask Profit, a show where we get all your stock-related queries answered from a fundamental as well as technical guest. Now, if you have any queries, do send us your queries on the numbers that are flashing on your screen below. But let's just take a quick look at how markets are faring right now. Well, we do have the Nifty 50, which is in the green, up about 0.16% in trade right now. When you talk about the counters that are doing well on the benchmark, well, we have Shriram Finance, which is the top gainer today. It's up over 3% in trade today, as well as some strength coming in Bajaj Finserv and HDFC Bank. The counters that aren't doing so well, tech, it is the IT pack. We have Tech Mahindra, TCS, Wipro and Infosys all under pressure, and we'll be addressing this in just a minute. When you talk about the broader markets, well, the benchmarks are outperforming the broader markets. The Nifty mid-cap is actually the top underperformer today. It's down about 0.4%. You know, the counters that are leading to this negative performance, we have again the IT counters, Emphasis, Oracle Finance down about 5% in trade today. Persistent Systems and L&T also seeing cuts of around 3 to 4%. When you talk about some of the counters that are gaining on the Nifty Midcap 50, we have BSC, which is the top gainer on the index right now. It's up over 8% in trade today, as well as some strength in some quick service counters like Devyani International is up 4.5% right now. But let's look at the sectoral indices. While we do have Nifty Finance and the Nifty Banking sectors that are the top gainers today, the Nifty Finance Index up about 1.3%. The top loser is the Nifty IT, and the index has seen a cut over 3% in trade today, with all constituents in the red right now. When you talk about the top loser, it's Emphasis and Persistent Systems seeing cuts of 4 to 5%. And we have Rucha joining us to give us more of an outlook on why the IT sector is under pressure today.
Right, so Nifty IT is falling in trade today, and this is largely on the back of one news that came out in Accenture, wherein Accenture is set to delay its staff promotion from June to December. Now, this is the information according to Bloomberg, and Bloomberg reports that Accenture had told its employees in an internal email that they are also considering to permanently shift the promotion cycle from June to December. Now, I'll tell you why will this be happening. Now, clients generally set their budget in December for the coming up calendar year. So if the December cycle comes into the picture with respect to employee promotion, the company gets better clarity with respect to how clients are looking onto their budgets, and then the company can decide onto their expenditure like employees, ESOP costs, etc. So this might be the reason why Accenture is considering to get a better clarity on demand. Now, talking about IT as a whole, well, Citi had come out with a note on Accenture per se, the global team, when it had mentioned that surveys point to relative demand stability. Now, mind you that over the last couple of quarters, demand was into pressure because of different macro uncertainties like war, interest rate, etc. But now the surveys conducted by Citi indicates that there is relative demand stability, if not a dip in demand. Also, clients are, however, cautiously optimistic towards CY25 budget, which means that CY25, that is calendar year 25, will likely be better than calendar year 24. But different events like the federal meeting which we have and the election cycle which is coming up this year could also affect clients' budget, and hence the budget could also affect how much they spend on IT, and hence reflect in the revenue for IT companies. Now, pressure also continues to be on smaller discretionary deals. Now, discretionary happens when clients have to cut out on their budget to accommodate different expenditure as well. So pressure on smaller deals although continues, and budget reprioritization is also happening by clients. But comparatively, like if we stand right now and if we compare IT's outlook back 4 quarters back, we can see that there is relatively better green shoots, which even different companies had mentioned in the first quarter earnings.
Thank you, Rucha, for giving us that outlook. We're now joined by our guest for today, and that's Vaishali Parekh, who's the Vice President of Technical Research at Prabhudas, Lilladher, as well as Rajesh Agarwal, who's the HOR at Aum Capital. Welcome to the show. Rajesh, I'll first come to you. IT under pressure. What are your views? Which counters do still have strength investors want to buy in today?
Good morning, Mihika. Good morning, Vaishali. IT is under pressure today because people are waiting for some outcome of the Fed, which is due to come on 18th, and not to forget that what SS Center had postponed their promotions and all. That's giving a somewhat bleak picture about the IT industry as a whole. And in domestic markets, we must not forget that in the last 1 week or so, IT stocks have given good returns. So some profit booking is creeping up. Otherwise, we are not that negative on IT as a whole. If somebody is willing to invest for a medium-term horizon, by medium-term I mean at least 6 to 9 months, because one, the numbers have been pretty good in the first quarter. Balance sheets are strong. Order inflows are better than expected. Particularly companies which are in Gen AI, cloud and all are doing well. And not to forget that once the rate cut cycle is initiated, we believe that those companies which have good exposure to US and Europe markets would start getting good new orders from discretionary spending, especially from the BFSI segment. Hence, we believe that this fall is a kind of opportunity for long-term investors to accumulate. Whereas we would recommend in the large cap, we would recommend Infosys or a TCS. In the mid cap, we would go with Persistent System, LTI Mindtree or Intellic Design.
So much, Rajesh, for giving us your view. We'll take this first viewer query for today, and this is from Deepak Patil, who is currently invested in Ircor International, and he's bought his stocks at a rate of 208. He's bought 286 shares at 600 shares at a price of 286, and he wants the outlook for the same. Vaishali, I'll come up to you first. How do the charts of Ircor International look to you?
Very good morning, Rajesh and Mihika. Yes, Ircon, we were tracking it just yesterday, and I think the stock has corrected quite a bit, and it has come into the oversold zone. So I think we have all the scope of this stock. So now I would say 220 would act as a support, and we may see a bounce back. But if 220 levels break, then the stock is really showing weakness.
Thank you, Vaishali, for giving us your insight. The next query we have is on Tata Steel. Now, the Narayan K from Chennai is currently holding shares of Tata Steel at a price of 148.68 a piece, and he's asking for the near-term outlook. He's asking if the upward momentum is expected in the near future. Rajesh, I'll come up to you. I know the steel sector, especially prices, have been under pressure. What's your outlook for the near-term future for Tata Steel?
See, for near-term future, it's very difficult to say because in metal pack, a lot depends on what China tends to do. And with some positive signals coming from Chinese economy that they are going to go for some monetary easing, I think metal stocks are going to gain. But if we look at our domestic side, the best part for steel sector is the iron ore prices is quoting below $90 and that's a very big positive for the entire steel industry as such because they're one of the major raw materials iron ore. And secondly, when we look at the kind of infrastructure development and the focus of government on real estate, capex and all these things, I think steel demand is going to go up. So with demand moving up, I think these companies are going to do well, not only Tata Steel, but others in this pack. One have to keep a medium to long-term view for having some meaningful gain. For short-term, I think 160 would be a decent target in the next 15 to 20 days.
160 target for the next 15 to 20 days, but a better outlook from a medium to long-term perspective. The next query is from Rao from Bangalore. He is currently holding 1,000 Vatek Vabag shares at a price of 1,300. Now he's open to hold it for a 2 to 3 month horizon, but he's asking for a near-term as well as a mid-term target. Vaishali, I'll come to you. How does Vatek Vabag look on the charts? Any specific targets to keep in mind?
So I would say actually, yes, the long-term chart is also positive, and even if I'm seeing the daily chart, it is in an uptrend, but right now it is consolidating. So I would say continue holding because once it moves past 1420 levels decisively, this could be going towards perhaps even 1600 levels. So my view is positive, and the near-term support for this stock lies at 1250. So that is how one can take the strategy, can add more or continue holding with the trailing stop loss to look for a target of 1600.
Thank you so much, Vaishali, for giving us that view. The next query is from Shreyas from Bangalore. Now, he's holding all cargo logistics shares at a price of 71.50, and he bought this for a swing trading session. He's asking if he should hold or exit. Vaishali, I'll come to you again. How does all cargo logistics look on the chart?
So there is really actually nothing much happening, but when I'm looking at the daily chart, it's just in the process of making the higher bottom. So if the stock is showing clarity of bottoming out at 66 levels and showing a swing upward towards 72, 73, I guess it's a positive view. And the actual momentum would begin only about 75 levels, because that is what will make it go into a trend and then perhaps go towards 85 to 90 levels. So 66, 65 should act as a support, and above 74, there will be a clarity for an upward trend to begin.
Got it. More clarity about the 74 level. The next query is from Anvesh, who's from Andhra Pradesh, and he's requesting a suggestion of whether he could enter Bajaj Housing Finance at this level or should he wait, and he's suggesting for good value to enter to it. Rajesh, I'll come to you. Stock is just listed. It's had a stellar run so far. Is it a good investment for someone who didn't get the IPO allocation?
See, you said it right. It was a stellar run so far. Got good listing, more than 100%. I would say even more than 140-50%, and that's a high price to pay for a company because in a housing finance sector as such, because it's trading at a P of around 60-70 odd, price to book of 10-11, whereas you're getting other companies which is like LIC Housing Finance at price to earning of 10 and price to book of around 1. So you see the kind of valuation differences there. Yes, I agree that Bajaj Housing Finance has done very well in the last 6 years or so, 39% CAGR growth, a AUM book of 97,000 odd crore belonging to a good family, good pedigree. But still somewhere I think valuations are stretched. It's no point having a FOMO kind of sentiment and chasing Bajaj Finance. Better to, if you want to invest in housing finance company, I think there are better options. Why not go for LIC Housing Finance?
Got it, Rajesh. The next query is for Adani Energy Solutions. Now, the viewers holding the shares at a price of 1,167 a piece, and he's holding 50 shares right now for the past 4-5 months. Now, presently, the stock is hovering around 988 is what the viewers have said. He's asking, what the next term view should be. Vaishali, I'll come to you with this. How does Adani Energy Solutions look on the chart?
Yes, so there is no trend right now. It's just consolidating. So let's wait and watch. If the stock goes above 1,020, I guess it will gain some conviction for a further upside. So till then, it is just consolidating and nothing much happening. Even the indicators are showing a sideways move. So no view right now, but 900 levels should not break. That should be the discipline that one needs to follow.
Okay, thank you. Got it, Vaishali. Just a disclaimer for viewers, NDTV Profit is a subsidiary of AMG Media Networks Limited, which is a Adani Group company. Well, let's now move on to the next query for today, which is for Grindal Norton, which the viewers holding at a share price of 2,100 a piece, and this is from Suresh Babu, who is from Hyderabad. Now, he's buying since the past 3 years, and the average price in his portfolio is currently at 2,100. And he's asking for recent downtrend, reasons for the recent downtrend, and he's recommending whether he should add more to his position or hold a book profit. Rajesh, I'll come to you. Any views on Grindal Norton?
See, it's a very strong company, a strong balance sheet, doing very well in its field. Had been given consistent return to the investors from a very long period of time. The only problem with this stock is the low volume which it has. For long-term investors, I think it's a hold from our side. And if by any chance it goes around 2,000 odd levels, then it's a add.
Got it. The next query is on Hindustan Zinc. The viewers, this is from Ramu from Tirupati, Andhra Pradesh, and he's currently holding 100 shares of Hindustan Zinc at an average price of 808, and he's currently facing a loss of 32,000, and he's asking what he should do next. Rajesh, I'll come to you next. Again, views on Hindustan Zinc?
Continue to hold, I would say. As we talked some time back, metals are going to do well. Not only steel, but zinc is also going to do well. It's one of the major raw materials used in different type of industries. They got good reserves, balance sheet is strong. The only problem which we are witnessing right now in the correction is just because of the kind of run-up it witnessed just before the dividend announcement and all. Continue to hold.
Hold for Hindustan Zinc. The next query is from Kanak Khatari, who's from Ahmedabad, and he's asking about DCW, where he's currently holding 5,000 shares at a price of 57.85, and he's almost making a profit of 2 lakhs currently, and he's asking whether he should hold his position or book his profits. Vaishali, I'll come to you. How does DCW look on the charts?
So I would say the trend is very strong. It is in fact ready for further up move. So keep a trailing stop loss since he's already sitting on a good profit. 90 should act as a trailing stop loss. And the way the chartical pattern is unfolding right now, I would say that yes, it's ready for a target of 110. So that would be my first target to look for.
Got it. The next query is from, it's for Wellspin Living. Now, the person's bought 10,000 shares at a price of 160. Now, his position, the share price did go up to 210 and then declined to 175, and the current market price is 183. And the viewer is asking if he could hold this for 1-2 years and looking for, the future growth guidance. And this is from Rahul Sharma from Chandigarh. He's currently making a profit of 2 lakhs. Rajesh, I'll come to you. Outlook on Wellspin Living?
See, the quantity is very huge, I would say. You should keep a strict stop loss at least of your buy price to not to turn into losses, and continue with the company. For a longer term horizon, I think the prospects are very good, doing very well. Recently, they had a management commentary which said they are expanding in a big way in the European markets also. Just continue to hold.
Hold for Wellspin Living. Then, just a quick reminder for viewers, when you do send in your queries to us, do send your name and location, so it'll be quicker for you to identify when you later stream the show. The next query is from Ram Mohan, and he's holding 50 shares of Dixon at a price of 3,445. He's currently making a profit of 5 lakhs, and he's asking whether he should hold his position or exit it. Vaishali, I'll come up to you. Do you think Dixon has more upside to go to? What do the charts say?
So, well, so far the way market is going, it's an endless upward move. I would say partial profit booking should not be ruled out, so that once there is a dip, he gets a chance to again re-enter. Else, keep a trailing stop loss and continue with the ride. It can go towards 14,400 to 500.
Rajesh, I'll come to you with this too as well. Fundamental outlook on Dixon Technologies?
It is a strong company, gainer of PLI scheme. They have got into tie-ups with certain companies like Asus and all for manufacturing. So that can be a good long-term story. But at this point of time, considering the valuation trading at a 3-digit PE figures, I think the valuation are overstretched. If not full, I would suggest partial profit booking.
Okay, partial profit booking for Dixon Technologies. The next query is from Jigar from Ahmedabad, and it's regarding HDFC Bank, and he's currently holding 310 shares at a price of 1,610, and he's asking for the long-term outlook. Rajesh, I'll come to you again. Views on HDFC Bank as well as the private banking space?
See, private banking space are doing well. I think some of them are on a strong valuation to give good long-term returns. For example, Axis Bank or a Kotak or HDFC are good value picks at this point of time. But as far as HDFC Bank is concerned, we have been very bullish and have been recommending on your channel to several times. I think it's still a buy at this point of time. It's one of the 10 largest banks across the world after the merger, going to report around 80,000 crores of profit next year. And have been stable. The only problem is credit growth, which I think once the interest rate cut cycle starts happening, it's going to do well. And not to forget the kind of subsidiaries this bank has, like HDFC Securities and others. They are also doing well. The valuation are extremely cheap. One should buy at this price for a medium-term horizon. By maybe 12 to 18 months, one can give good returns.
Got it, Rajesh. The next is another private bank, and this query is from Shivarudai from Mysore, Karnataka. Now, he's bought 13,000 shares of IDFC First Bank at a price of 58.6 rupees in November 2022. He's currently sitting on a profit of 1.8 lakhs, and he's seen not much of an upward trend, and he's asking whether he should hold or exit some of his position. Vaishali, I'll come to you first. How does IDFC First Bank look on the charts?
So I would say technically it is very well placed. If it moves, it can go towards 83, 88 levels also. But it's been quite a laggard. So I mean, right now when we are focusing on all frontline banks, like to name the banks, ICICI, Axis, they have already got into a very good momentum. So if time is not the factor, then I would say hold. But otherwise, these are much better stocks to look forward.
Got it. The next query we have is from Amit Murkate from Mumbai. Now he's asking whether he should buy CDSL due to the today or wait for some correction or a further dip in the counter. And he's asking what a target would be for a 1 year period. And so Rajesh, I'll come to you. Outlook on CDSL on a more of a 1 year basis.
See, we have a very strong view on CDSL. The company has been doing well. The demat accounts are increasing by leaps and bounds every month. We are seeing good numbers coming in. There are only two pillars, NSDL and CDSL. While NSDL is unlisted, you have only one option in the listed space to participate in this, Larry, is CDSL. With a number of new market participants coming in, I think there is a good growth prospect. Not to forget, they are venturing to insurance dematerialization. Also, a lot of things are happening. I think one should continue to hold. If market corrects for any reason, this stock might see a correction to around 1400 odd rupees. That would be a good entry level. But for a long-term investor, I think it's better to buy and stick tight for the next 12 to 18 months for a target of 1800 odd rupees.
Thank you, Rajesh, for giving us. We're just cutting across to SBI Chairman C.S. Shetty's address at the Financial Markets Conclave. Do listen to what he has to say right now.
After China, if you really see, in fact, sometimes I feel China is more homogeneous than India. And India is extremely diversified in culture, in terms of people, languages, and the pursuits of economic activity, what we do is also extremely diversified, which means that this economy requires as many diversified players as possible. In fact, that board is a replication of what we need. If you see that board, it has got every element what is required for the Indian economy. The mobilization of savings by the banking system and deployment of these funds both by the banks and non-banking financial companies, and NBFCs and MFIs bring the reach and at a lower cost than what the mainstream banks have. And the fintechs bring the innovation, in the financial services, both in terms of the designing the product and the delivery, more importantly, the delivery. So the trick lies in that what kind of responsible behavior all these players will bring together. While understandably why the regulator, see, unlike you talked about banking not having SRO, I think banking is a highly regulated industry. We do not need an SRO. But in case of NBFCs, there is an SRO, FDIC, what is that?
FIDC. No, sir, it's not an SRO. It's not an SRO.
Maybe they are moving towards SRO. And apart from the self-regulation, I think the primary capital providers have a greater responsibility. If banks are mobilizing the funds, savings of households, the responsibility of lending to the NBFCs, MFIs, and their lending practices, and eventually the last mile which is being provided by the fintechs, I think the whole life cycle of the money movement has to be responsibly done primarily by the people who are mobilizing the savings. That is where the RBI is coming out saying that I'm not bothered about who's the front end, but if he is using your capital, and if he is using your name, the responsibility is on you. I think if we understand that and we put the guardrails in place in terms of the ultimate consumer is getting the money which is made available by the primary lenders, I think that is something what is going to help. And I am a strong believer that we have to have all the financial players operate in India. And they all have to operate in a manner that we'll move towards more inclusivity, more efficiency, or more customer centricity. I think if these three elements are made fundamental to our financial ecosystem, we need not really worry about too many players being there, too much regulation being there. I think this is something what we need to adopt.
Thank you, Mr. Sethi. So actually we carried forward from the past discussion where you spoke about inclusion, growth, innovation, coordination. And here the leader of Indian banking system talking about one more term is using the responsibility. So I think this is the vast world where inclusion, innovation, coordination, everything is going to happen, been happening, but everything has to be done with responsibility. That's the key to India growth story. That's the key to make the financial system sound and resilient, which already is, but to continue to be in this position, and the key to support the India growth, because in a country like India, still developing country, unlike developed market here, banking sector is a proxy for economy. Right, sir? With that note, if you enjoyed, just give him a big hand and thank you.
Thank you very much.
Thank you for taking time off on a holiday and coming. Thank you, sir.
Well, that was the SBI Chairman's commentary at the Financial Markets Conclave. But with that, we're completely out of time on this edition of Ask Profit. Thank you for joining us on the show today. And viewers, remember, you can get all your stock-related queries answered with our fundamental and technical analysts at the same time tomorrow as well. Stay tuned to NDTV Profit.
to Hot Money. This is Mahima Vachhajani. Well, before we move on to the stocks that are in focus on this edition of Hot Money, let's take a quick look on how the markets are doing. Let's pull up the benchmark indices and see how they're faring out in trade today. Well, both the Nifty and Sensex did hit record highs in trade today. However, both the indexes are seeing range-bound trades. The Nifty is trading within a range of roughly 90 to 100 odd points currently, 0.2% up in trade. The Sensex is also up 0.2% in trade. Let's also pull up the broader markets and see what they are doing in trade. Well, the broader markets are seeing a tad bit of pressure in terms of the mid-cap 150. Let's pull up that and see how it's faring in trade, where it's down almost 0.4%. And the small-cap 250, if you can pull up that, the small-cap 250 is trading flat, up around 0.07% only. Let's also put up the Bank Nifty. It's a very good day for Bank Nifty today. The range is also wide for bank trades. And in terms of the index has been gaining, and it's almost at its day's high and is up around 1.1%. And it has crossed the 50 to 600 level mark. So yesterday it was trading within a range of 50 to 200, but now it has picked up momentum and is trading within the range of that 50 to 700 levels. Let's also pull up the contributors on the Nifty and see what are the counters in green and what are the counters in red. Well, there are stocks like HDFC Bank, ICICI Bank, some M&M, some counters in green. But the major highlight is the IT space. All IT sector stocks in red: Infosys, TCS, HCL, Tech Mahindra. And possible reason why the Nifty is under pressure is because of the IT stocks. Well, Emphasis badly hit down around 5.5%, followed by Persistence, TCS, L&T Tech and Tech Mahindra. Let's also pull up the breadth of the market and see what advance decline ratio looks like. In terms of the advance and decline ratio, well, the graph looks sort of crazy, but the ratio is roughly 1.5:1, whereas the declines are leading the pack. It's the seller's market today, and roughly 1200 odd advances versus 850 odd advances. So that's how the breadth of the market looks like. Let's also quickly pull up the NSE 500 and see what are the top gainers and top losers. Well, there you go. There is losers, of course. We have IT names like Emphasis, Oracle, Blue Dart. We also have something like BASF and Heidelberg Cement. But counters in green, well, we have HEG, we have Graphite, Alkyl Amines and BKG Foods leading the pack. But let's move on and let's welcome in our guest, Mrs. Sameer Dalal from Natwar Lal & Sons Stockbrokers. Welcome to the show, Sameer. Sameer, before I come to you with your views, the sector in focus today is IT. The stocks, a lot of stocks in the IT space are under pressure, and the Nifty IT is down almost 3% now as we speak. And we're joined by Rucha, who has more details on this. Rucha, why is the IT sector in pressure today?
Right, so Nifty IT is falling in trade today, and this is largely on the back of one news that came out in Accenture, wherein Accenture is set to delay its staff promotion from June to December. Now, this is the information according to Bloomberg, and Bloomberg reports that Accenture had told its employees in an internal email that they are also considering to permanently shift the promotion cycle from June to December. Now, I'll tell you why will this be happening. Now, clients generally set their budget in December for the coming up calendar year. So if the December cycle comes into the picture with respect to employee promotion, the company gets better clarity with respect to how clients are looking onto their budgets, and then the company can decide onto their expenditure like employees, ESOP costs, etc. So this might be the reason why Accenture is considering to get a better clarity on demand. Now, talking about IT as a whole, well, Citi had come out with a note on Accenture per se, the global team, when it had mentioned that surveys point to relative demand stability. Now, mind you that over the last couple of quarters, demand was into pressure because of different macro uncertainties like war, interest rate, etc. But now the surveys conducted by Citi indicates that there is relative demand stability, if not a dip in demand. Also, clients are, however, cautiously optimistic towards CY25 budget, which means that CY25, that is calendar year 25, will likely be better than calendar year 24. But different events like the federal meeting which we have and the election cycle which is coming up this year year could also affect clients' budget, and hence the budget could also affect how much they spend on IT, and hence reflect in the revenue for IT companies. Now, pressure also continues to be on smaller discretionary deals. Now, discretionary happens when clients have to cut out on their budget to accommodate different expenditure as well. So, pressure on smaller deals although continues, and budget reprioritization is also happening by clients. But comparatively, like if we stand right now and if we compare IT's outlook back 4 quarters back, we can see that there is relatively better green shoots, which even different companies had mentioned in the first quarter earnings.
All right, well, Rucha, thank you so much for breaking that down for us. Sameer, I'll come to you on the entire IT pack. Well, the entire IT pack is witnessing a lot of pressure today. Your views on it?
So, to sum it up very simply, what your person was talking about, the delay in this thing, I don't think that is the main cause for the correction. I think what has happened is the IT companies have moved up far more what than fundamentally justifies, right? We have companies that are targeting and talking of growing their top line at anywhere between 1 to 7 to 8%, maybe HCL Tech and Persistent on the higher side. But the balance of them have top line guidances in mid single digits to even some of them like Infosys targeting 2 to 4, right? Similarly, a lot of the positives that came even when the growth was not so great for the IT sector in FY24 was the fact that margin expansion happened and allowed the profitability to grow at a faster pace. I think a lot of that positivity is right now behind. It's going to be tough for companies to continually increase their margins going forward. Given the fact that we're talking of low growth, stable margins, maybe, cash flows are great. I don't deny the fact that IT companies have good cash flow, but valuations have moved up quite a bit. And today, one of the simplest things, we are talking of a situation where interest rate cuts are expected to happen. And usually that happens when there is a bit of a slowdown in the economy, or not slowdown, but, the growth momentum has taken a hit. Now, when that happens, usually companies in the US and where especially Indian IT sector focuses, they probably would look at, the US companies to ensure that their margins remain stable can obviously look at reducing their IT spends. We're not saying that it will not grow, but it may not grow at the same pace that everyone has factored in, and that, FY25 is going to be cautiously optimistic or optimistic. So given that view, I think a lot of the positives were priced in and the negatives are not. And I think the market is finally taking cognizance of that. And we're seeing a bit of a correction in the valuations. Can this trend continue for a bit? Yes, I think it can. But given the fact that these are very strong companies with good cash flows and good growth expected maybe 2 years down the line, corrections may not be very deep. And there will be people coming in to buy at the end of the day. Like I said, we've been saying for a while, mutual funds are sitting on a large amount of cash. And some of the large cap IT companies become the best investment on correction. So we expect the correction to continue, but it's not expected to be very deep.
All right. Well, that's a very interesting take on the IT space. You do expect the correction to continue, but it will not last longer is what, you've said. But moving on, in the realty space, well, Seagull India is buzzing today. Now, it's been selected as an L1 bidder by NHAI, and this is for an Ayodhya bypass. Now, we have Varsha joining in with more details on that. Varsha, what's happening with Seagull?
Well, yes, Mahima. So the stock is buzzing on the back of the company being selected as L1 bidder by NHAI for the two projects. One is Northern Ayodhya Bypass. The project cost is around 1,200 crore, and the other one is Southern Ayodhya Bypass, for which the project cost is around 1,300 crore, and the total project value stands at almost 2,500 crore. Now, little bit about the company. Company is an infrastructure construction firm, specializes in elevated roads, flyover, bridges, railways, expressways. And the order book, if you see, order book as on September 2024 stands at around 9,470 crore, and 80% of this order is constituted by the projects awarded by NHAI. And if you see the recently secured orders, that includes Bhubaneswar Metro Project and development of Kanpur Central Bus Terminal, and they are managing 18 ongoing projects, which includes 13 EPC and 5 HAM projects. If you see that they are expecting revenue of around 4,200 crore in FY25 with EBITDA margins ranging from 13 to 15%, and they also anticipate order inflow of around 4,000 to 5,000 crore for FY25.
All right, Varsha, thank you so much for breaking that down. Well, on the back of that, the stock is up 5%. So significant move on Seagull India today. But Varsha, stick with us. You know, Emcure is also buzzing in trade today, and this is after Kotak Institutional initiates an ad rating on the particular stock and has given a target price of 1655. What is Kotak Institutional exactly bullish on when it comes to Emcure?
Yeah, so so yes, they have initiated ad rating, and with their target price, if you see that there is upside potential of 11%. Now, according to them, Emcure is one of the few Indian pharma majors which has no direct US generic exposure, and thereby lending greater earnings visibility. They have greater earnings visibility, and despite its industry leading return ratios and no direct US exposure, Kotak expects Emcure to trade at a discount to other domestic focused companies such as Mankind, Torrent and JB, owing to its relatively inconsistent domestic track record and risk of any further repercussions from the US drug fixing case. Emcure, so it's the fifth largest company by domestic sales and with top position when it comes to gynecology, and Kotak has projected 14% overall sales CAGR from FY24 to 27, and this sales is led by organic growth, Sanofi deal and Mantra consolidation, and Kotak is also expecting 30% increase when it comes to 30% growth in EPS from 24 to 27 because of higher MR productivity, the capacity utilization and lower interest costs. And Kotak has also highlighted risk for the same, so they are expecting potential further repercussion from US and Canada drug price fixing cases, new litigations and IPM growth underperformance are some of the risks which are being highlighted by the Kotak.
All right, Varsha, thank you so much for breaking that down for us. Samir, Emcure, of course, is buzzing in trade today, but the pharma space as a whole, has been in the news since, the past 2-3 weeks. Your take on the entire pharma space?
So we remain quite positive and constructive on companies that cater to the global markets, right? Because there are a huge number of large patent drugs coming off patent, which gives a huge opportunity for these Indian exporters who have the generic business to grow that angle of the business. You have a lot of ANDAs filed by the larger companies, which would be Cipla, Lupin, Sun Pharma, Dr. Reddy's. And, as some of these start getting the light of day, what you will see is the top line and the profitability for these companies continue to grow. But we still remain very positive and more constructive on the larger pharma players, and in particular Sun Pharma, simply put for the reason that Sun Pharma is not only working on a generics business, but they are working on generics with a twist, in the sense that they are doing branded generics, in certain products, which allows them to have a better pricing. And we believe that at the end of the day will allow them to have better profitability and margins. Again, like I said, the opportunity is quite large. The problem, I guess, across not only the pharma space, but entirely across the market is, for a lot of these companies, the valuations have moved up quite significantly. So a lot of the positives have been factored into a lot of these stocks. From here, we are not expecting major re-rating. In fact, if anything, the ratings could probably, the valuation multiples could probably move a little bit down, and you could see the stocks moving sideways over a period of time. Though the growth, we expect it to remain strong, but we are constructive, and on correction, we would definitely recommend buying certain pharma counters. But like I said, we would like to have a 10 to 15% correction in the market and overall in the pharma space as well.
All right. Well, the pharma space as a whole is under pressure today. Only Emcure buzzing in trade today. It's up 3%. But the Nifty pharma, if you can pull up that, stocks like Abbott, Biocon, Laurus Labs, Glenmark, Zydus Life, all of those counters in the red and under pressure. But moving on, another stock that is buzzing today is, SKF India. And there's a Nuvama note which has come out on SKF India, where they've said that the parent carving out automotive business, might be a positive for the company. And we have Puneet joining in with more details on that. Puneet, what is Nuvama saying about the SKF business?
Well, definitely. So, it's a very important transaction that's happening. The Swedish company is separating its automotive as well as its industrial division. And separately, they've released a press release arguing and augmenting what the company's plan is going forward. So specifically, the automotive division will be separately listed on Nasdaq in Stockholm. Going forward, they're expecting that calendar year 25 is going to be the first year of where this operation will be separated, and expecting to list by 2026. Now, Nuvama has written a note on the same. They are mentioning that the company is planning to unlock value via creation of two separate independent companies which will have an independent board, and as well as investment decision will be separately handled by both these companies. They mentioned that the independent focus and performance will drive both the businesses very strongly going forward as well. They mentioned that the spin-off is expected to be completed by calendar 25, as we mentioned. And SKF is planning to list also this particular division by first half of calendar year of 2026. Now, Nuvama believes that SKF India should also benefit from this split, because the expectation is that the India business will also have two separate companies, and it's important to note and also see if the automotive division in India is also separately listed on the stock exchange here in India as well. They are seeing a potential beneficiary of enhanced focus on the automotive division as well as its margin. So just to put some perspective, for calendar year 2023, the automotive division contributed roughly 40% of the total revenues of about 80,000 odd crores for the global level, but the margins were around 5.6%. Compared to that, industrial division had roughly around 15.6% of the margin. So the industrial division also has the higher revenue contribution of 60% in the total business as well as higher margins. They're estimating that benefits of this particular separation will outstrip any kind of cost that the company might incur for this separation. So it's overall a very positive news flow. We'll await more details from the India entity specifically of what happens within India and what's the plan going forward, but definitely a positive on the global level, and some more details awaited after Q2 for SKF India. Back to you.
All right, Puneet. Well, thank you so much for breaking that down for us. Well, the stock did see an up move in the start of the trade. However, it has cooled off and it's down around 0.4% as we speak. But Samir, what do you think about SKF India splitting its businesses?
So it's too early to tell what exactly would be the outcome of this. But look, there are two ways of looking at it, right? Whenever we look at some companies merging similar kind of businesses, we always talk about operational efficiencies that come through which benefit. So when you're splitting off a business, sometimes what happens is you have a double cost structure also that could happen. But what it also brings in is a bit of focus into a business, right? Today, if the industrial business is more profitable, the capital deployed from the business towards the industrial side obviously increases, because that's where your ROEs are better. And at the end of the day, any top management wants to ensure that you get the most bang for your buck. So by sometimes separating out the two businesses, what you could definitely get is a better focus on each of the businesses. The auto business, which does have a bit of a lower margin, could get more focus on more product profile or whatever, which could drive. So we need to see exactly how they plan on carving it out, and then what the two separate business strategies are going to be. It's too early to say what will happen. What we do know at the moment is, look, the businesses are doing relatively okay. Growth has been a challenge and it's not been growing very aggressively. The company where it has benefited has been the margins. They've actually been able to increase the margins over a period of years. So if they're able to continue doing that even as a separate thing, that's great. But valuations again have moved up. A company in the auto ancillary trading at about 45 times earnings. It's not cheap, because at the end of the day, they're a B2B player, not a B2C. B2B should always get much lower valuations, because margin expansions become tougher when you're selling to an OEM or to any of these entities which know what the costing is, and they also want to keep their costs in check. So where we find difficulty is valuation. Business growth, I don't think, is a major concern. It will be slow, tepid, but we are not expecting any major run-up in the near term just because of the value unlock. I mean, just because of the demergers. There's no value unlocking. It's just a demerger of the two entities.
All right. But another stock that is buzzing is Nava Limited. Now, it's mainly a ferroalloy manufacturer with presence in India as well as Africa. But it's actually the company's other businesses that could be driving the growth for the stock this year. And we have Mihika joining in with more details on that. Mihika, what are you picking up?
Nava stocks has been buzzing, for a couple of days now. Hit an intraday high of 7.24% today. It's up 33% in the last 5 days and 195% year to date. Now, the company did have a strong Q1 results where revenue, EBITDA and profits grew 17.3%, 10% and 30% respectively, and the growth was mainly driven by the power segment, and the stock did start seeing a pickup in the first week of June actually. When you talk about segment-wise drivers, well, in terms of energy, the company operates Zambia's only thermal power asset, and the 300 megawatt capacity that the company has accounts for 9% of Zambia's total energy capacity. In terms of the agribusiness segment, the company is actually betting on avocados. Now, Nava Avocado is establishing large avocado plantations across Africa. They aim to plant over 4 lakh trees by 2027. 91,500 trees have already been planted, and 1 lakh more trees will be planted by November of 2024 and March of 2025 each, and they expect revenues of 3 to 4 million in FY26 with peak revenue starting from 2027-2028. In the mining sector, the subsidiary Mamba Collieries has been issued 2 large scale exploration licenses in July 24 for lithium, amethyst, aquamarine, tin exploration. This is around 8,200 hectares area. The company also operates Zambia's largest coal mine via Mamba Energy with reserves of 193 million ton, which provide a consistent cash flow source. And lastly, the company has also reduced its debt. The company and its subsidiaries have completely paid their debt as of FY24, and the zero debt will help reduce their interest costs going ahead, and they plan to be a debt-free company, except one subsidiary which will go into expansion, which is their mining subsidiary. They could that subsidiary could take on a little more debt, but the stock has several growth drivers so far.
Well, thank you so much for breaking that down for us, Mihika, and that's a significant deep dive that you've done for the stock. Well, Samir, interesting stock here. It's ideally a metal company, but it's foraying into avocados and stuff. Your view on Nava?
Sadly, this is one of the counters we haven't studied in the past, so it's impossible for me to comment.
Okay. Okay, no worries. So then we'll shift focus to Reliance Infra. Now, Reliance Infra is up 5% today, which is not normal for a company like Reliance Infra. Now, multiple exchange filings. To start with, they are set to settle dispute between Adani Electricity Mumbai and Adani Electricity Solutions. They're also set to, settle the dispute and the breach of agreement relating to transfer of Mumbai power business. And parties have agreed to withdraw claims against each other, and no monetary consideration exchanged between these parties. Now, they've completed one-time settlement with LIC relating to NCDs, which were issued by the company, which was worth 600 crores. And overall, also, they've guided that net worth of the company stands at 9041, and they cleared dues to LIC, Edelweiss, ICICI Bank, Union Bank,